What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 25th of 2017. Well, folks, as you all keep up with my channel, you know that from time to time I'll always reiterate long-term investing over trading. And there's a reason for this, because I know that statistically speaking, the majority of you are going to benefit from long-term investing over trading. Not to mention, I know a lot of you out there do not want to be watching the charts 24/7, FOMOing and FUDing over price action, and doing so much crazy technical analysis that your mind goes into a complete whirlwind. So, again, I really want to keep it simple for you all and show you all that it's not that complicated to long-term invest. And the biggest misconception I think a lot of people have in getting into long-term investing is they think there's a one-size-fits-all approach. And that couldn't be further from the case. In fact, there's a lot of ways that you can long-term invest, and today I'm going to show you all 3 different ways that you can long-term invest in cryptocurrencies to really meet your risk to reward profile and really make sure that you feel comfortable in long-term investing. So you can sit back, relax, and know that you're most likely going to be winning in the long run. So, what are these 3 methods? Let's go ahead and dive into them, and I'll go into a little more detail as to how these could really mold into your type of personality in the sense of investing. Alright, so the first one I want to talk about, this is really the safest out of all of them. This is the blue chip investor. So if any of you have traditionally invested in stocks, I think you'll know the term blue chip. This is generally used to define stocks or companies that are publicly traded and they have good security for the long run. They usually pay nice dividends, they have a nice steady uptrend, they have good adoption, massive multi-billion-dollar companies that are trustworthy and reliable, usually hold patents or some great technology. And these are very stable companies that you can hold in. You're not going to feel, you're very risky for holding them. So this portfolio has a few key factors in the sense of cryptocurrency investing that I really recommend you take home if you feel like you'd fit into this kind of low-risk, long-term approach where you want to kick back and relax. The first one is safety comes first. So again, you're picking a lot of leaders that have stable long-term growth, not ones that you're going to see ride up 100% in 1 week and then go back down to their lows. No, we want ones that have consistent annual uptrends each and every year that prove consistent returns. So you'll usually find this in the top 10 coins. Now, if you want to be a blue chip investor and you have to step out of that boundary a little bit and maybe get into some mid caps that might be a little less valued, there's no problem with that. The majority of your portfolio, though, should be in large caps, the top 5 cryptocurrencies. So I would say a good chunk of that could be Bitcoin, a good chunk could be Ethereum, Litecoin, Ripple, whatever it may be. But also hold some mid caps in there. Get a little bit more of that risk, and hopefully maybe you can pick out one of those mid caps that might be the next Ethereum, that might be the next Litecoin. So again, mostly large caps, some mid caps as well. And again, if you're just someone who believes in the long run of cryptocurrencies and you don't want to miss the run up of the large players and you just want to kick back and relax and hopefully, step into an early retirement, this could be a great approach for you. So the next one I want to talk about is the middle down investor, okay? I've always tried to find a better term for it over the past few years as I've thought about these different approaches, but the middle down investor seems like the best one because it really is a middle down approach to crypto investing, or, if you want to do this for stocks as well. It's a fine mix of safety and risk. That's the big point I want to knock home. And this is something that I generally do because I'm more of an active investor than I would say most people. With the blue chip investor, you're someone who wants to kick back, you don't want to look at your charts, and you simply just want to hope for the long run. This middle down investor approach is something that takes a little more time in the sense of research and watching, the charts from time to time, checking up on your investments, maybe at least once a week at least. So again, it's a good fine-tuned mix between safety and risk, and the way that that's defined is by investing in both the top 100 coins and holding around 10 to 20 coins in your portfolio. Again, you can hold a little bit less than 10 coins. As you know, sometimes I'm not holding up to over 10 coins. But again, if this is really the investor approach, I recommend getting a good sense of diversification in there to mitigate your risk. But at the same time, if you're holding the top 100 coins, you know that you're holding at least a few players that are really going to take off in the long run. And of course, you might have some losers as well, as most people will in their long-term portfolios. Seeing as we're so early on in cryptocurrencies, and anyone can create a cryptocurrency. So about 80 to 90% are going to fail. So you really want to pick the leaders right now, the ones that are winning, and the ones you can see winning over the long run. If you pick coins out of the top 100 coins, you'll be much more risk averse than just picking any other coin. So, and again, the last point I want to draw on is the diversification of valuation types. So again, always have about 25% large caps. So in this case, I'd say, Bitcoin, Ethereum, get some of those good players in there. And then for the 50% mid caps, this is where you can really get a lot of those players that you think will be the next Ethereum in there. So for example, I know some of these that I think could be really big ones are Arc, Omise Go, Neo. You know, a lot of players like that out there that could be massive players in the long run, whether they be enterprise solution ICO or recently launched enterprise solution ICOs, cryptocurrencies that have a large mass scale adoption to them, and the potential to really take off and be adopted on the blockchain. So again, that's really where that mid cap category comes in. And then the 25% lets you get some of that good, you know, kind of risk in there. It lets you pick some of those small caps that you think are undervalued, that you think could really be the next Ethereum, that are really, really undervalued. So again, I have some of these picks in my portfolio, and they're not hard to spot. You can really just do your research and find the ones that you like. And there's no specific ones I could just recommend to you and say, oh, these are going to be the next Ethereum. It's all opinion based. And I know that you guys have some picks out there that you're like, oh, this one could be the next big one. If you've done the research, if you put in the effort to look into it, and you know how to find good cryptocurrencies consistently, go ahead and pick some small caps. Put a little bit of risk in that portfolio, and hopefully you can get a good reward in the long run. And the last one I want to talk about, and I love the picture I found for this because it really meets it, the Risktaker. Okay, now this is something that I've heard a lot about in the crypto community. It's something I haven't really talked about on this channel. The Risktaker is not a portfolio where you're just like, you know, Dogecoin all in. I'm not meaning that. I think that would be a terrible idea just to put it all in one coin. But the Risktaker actually has a heavy amount of diversification, but they take a higher level of risk. Now, how does that exactly work? I know higher diversification usually mitigates risk. Well, the high diversification is a great aspect of this portfolio, but you take on higher risk by really having the flexibility of investing in any coin, okay? Now, again, you can really lower the risk and still be the risk taker and take this approach if you pick ones that are more highly valued. But this portfolio depends on mass diversification, holding more than 20 coins. Some people I know, for example, I've heard stories where people are holding over 50 to 80 coins in cryptocurrency, a mix of crypto coins, ERC20 tokens, I mean, whatever it may be, they just hold a huge mix of things. Now, this might seem like a silly approach because you're like, what if you diversify too thin? Aren't the majority of cryptocurrencies are going to fail? Yes, that's true. A lot of your investments will most likely not really move up that much or go to zero over some time. However, in this approach, if you can get, for example, 10 to 20% of your portfolio being really strong leaders or continuing to go up over time and really, really going to the upside, you can beat out the losses on your portfolio. And a lot of people did this before the big era of Bitcoin, Ethereum, and Litecoin, and they just picked a lot of coins. And then they were able to have those 10 to 20% that were winners that have lasted still over the past 5 to 6 years, and they've made massive amounts of money and good returns over the long run. Yet at the same time, they really mitigated a lot of their risk because they diversified. So again, this is an interesting approach. It's talked about by a lot of YouTubers. This was really the original crypto investment approach. I would recommend not to do this in stocks though, but in the case of cryptocurrencies, especially if you're using something like Bittrex where you pay a percentage-based commission rather than a one based off of like paying $5 or $6 per trade or investment, it's really great, and there's a lot of flexibility to do this in crypto. And I can tell you there's been a lot of success stories as much as it's a high-risk approach. So, again, the risk-taker approach is a very interesting one, and it's for those of you out there who really just want to guarantee you're going to be holding the next Ethereum. And again, it can be a very profitable approach, but again, you are taking a higher level approach because a higher level of risk because you're not holding those blue chips that you know are solidified and are going to provide stable returns over the long run. So, again, you've got to assess and see if it's right for you. But anyways, everyone, that's it for the video. I'd like to know down in the comments below which one suits you. I'd like to hear what your risk to reward profile is. Do you guys like excessive diversification? Do you like just picking the winners, riding it out for the long run? I want to get a discussion going down in the comments down below. Hear a lot about what you are deciding to do in your trading and investing strategies for cryptocurrencies. But until the next video, everyone, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.